Cash value versus death benefit of life insurance? Gosh, will my family get one, both, or neither? Well, the short answer is that you're in the driver's seat. You can control the design of the policy and what and how it pays out at the end of the policy. I will show you today how this all works. My name is Gail Longenecker. I've consulted to hundreds of entrepreneurs, executives, and engineers in the area of life insurance. For the best life insurance advice, subscribe to my YouTube channel here and be sure you hit the bell to be notified when I upload new videos. This can be confusing, so I'd love to see you post your cash value versus death benefit questions in the section below. Happy to answer your questions. Now, before I cut away to share my screen, there's a few beginner ground rules I want to cover. The first one is yes, at the time of death, the life insurance policy pays the death benefit and none of the cash value. Before that totally bursts your bubble and ruins your day, that's why it's wise to access your cash while you're still living. The power play here is how to do it tax-free. Access to cash is either with cash withdrawals or policy loans. And number 3, when you withdraw or borrow against your cash value life insurance, the amount is counted against your death benefit. For example, say you have a $2 million life insurance policy and you've taken $500K from it, the remaining net death benefit is $1.5 million. The fourth point is a good insurance company will calculate the most favorable loan distribution for you. The life insurance loan payment is already taken into account when they show the net death benefit. And number 5, my specialty is with index universal life policies, but these same concepts apply with whole life or universal life too. Sorry, but term life has no cash value. Number 6, a life insurance policy designed for maximum cash or growth and the least amount of death benefit or costs give you the best options to have your cash value and your death benefit in this case. Let's see the cash value versus the death benefit in action. Let's dive into the numbers. Here you see on your screen a lot of information, a lot of lines and colors going in all kinds of different directions, but this is a really nice visual for people. So let's take a look at what happened. This is a client, male, age 32, good health, not excellent. And he started to put in $20,000 per year into an IUL at the age of 32, okay, or 35, something like that. So really, really young, he started to save for retirement. And that was the point. He didn't have any other vehicle to do so, and he wanted to really make the best of all the money that he was able to save. So he was putting in $20,000 per year, which was about 15 or 20% of his income, assuming no raises. And that cumulative premium, top left here, cumulative premium is $600,000. So that's represented by the blue line. It starts at 0 and the cumulative premium, it increases until the age of 62. He put no more money into the policy, and so that line is going to be flat thereafter. So that's what he put into the policy out of his pocket. This orange line is the net surrender value over here. So that's your walk-away value. So if he wanted to just go to the insurance company and say, hey, I want my money at this age, 62, the insurance company would cut him a check for $1.6 million. Unfortunately, it would be followed with a big fat tax bill from the IRS if he just flat out surrendered it. This is why we recommend that you actually loan the value against the cash account instead of withdrawing or surrendering. However, that's a pretty nice amount. If you needed 1.6, that would be available. Let's see. So net death benefit at the age of 62 is $2.4 million. So it started way back here at $800,000, and then it increased when he stopped paying premiums. It increased to a max of $2.4 million. That's his death benefit. Now, so what's going on here? If he were to die at the age of 62, he'd get his death benefit. Pretty darn good. Okay. If he were to die at the age of 42, still a death benefit of $1 million there. Pretty darn good. Okay. However, the point was to actually use that cash account and let it grow. So will he get the cash value plus the death benefit? Okay. So at the age of 62, he starts taking out some of these tax-free distributions in the form of a loan. And watch his cumulative income on the right here. So he'll take out actually $140,000 per year tax-free, which is equivalent to $200,000 of taxable income. This is so exciting. I love it. So he's taking out and loaning against that cash value. All the while, the seed is still growing. So let's see what happens at the age of 82. We have a cumulative income of $2.8 million he's been able to take out tax-free. Wow, that is amazing.
And also what happens is he still has a death benefit of 1.2. That's a total 2.8 plus 1.2. That's $4 million if a death were to occur right there. Okay. Pretty nice. So this answers the question, do you get your cash or your death benefit or both? Generally, what we want to see you do is actually take loans against that cash value so that you can use it while you're living. At the point that the policy pays out that death benefit, the death benefit is paid out, and any cash value that's left in the policy is then surrendered back to the insurance company. That's why you want to use the cash while you're alive. Okay. Plus, it's tax-free as long as you obey all the rules and you use a financial professional to help you through all that.
Go ahead, smash the like button if this was valuable for you. Your wealthy investments should include a properly designed and funded life insurance policy. I prefer an Index Universal Life policy or an IUL policy, so let's be sure that it's designed with all the features that benefit you most. Click on the link below to learn how to become my client. I also have other videos that will help you understand cash value life insurance. For example, after this video, check out my other episode called Borrowing Against Life Insurance Explained. Look out for my next video too, where you'll learn all about the 3 troubles with IULs. Thanks for watching, and remember, I'm in your corner helping you to build wealth your way.